Thank you, Ryan, and thank you very much for running things for us this evening. Hello, everyone, and welcome to tonight's AAII Webinar Wednesday event, Secrets Behind AAII's New Dividend Grader. I'm Wayne Thorpe, AAII Senior Financial Analyst and moderator for tonight's event. With today being Veterans Day, though, I would first like to take this opportunity to salute and thank the past and present men and women who have served our country. And I wish to convey the deepest thanks from all of us at AAII to our members and their family members who have served or who serve today. Now, it is my pleasure to introduce tonight's speaker, Derek Hageman. Derek is a financial analyst at AAII and the editor and lead analyst for AAII's Dividend Investing service. He earned a bachelor's degree in finance and French from the University of St. Thomas in St. Paul, Minnesota, and an MBA from the University of Denver. Derek is also heavily involved with AAII Stock Ideas stock screens, and I'm pleased to pass the torch to him for the annual stock screening review that will appear in the January issue of the AAII Journal. But before I turn things over to Derek, I want to remind everyone that you can also submit questions to Derek via the GoToWebinar control panel. I will be monitoring this feed and select questions for Derek to answer throughout the presentation. And so, bienvenue, Derek.
Oh, merci. Thanks, Wayne. It's a pleasure to be here. I'm very, very excited to talk about the new dividend grader. I am a little nervous, though, because what our viewers don't know, or maybe they do if they watched the last webinar last Wednesday, we had a little bit of a wager. Our two college teams played each other a couple weeks ago, so I'm a little bit nervous what direction you may take this.
You know, I have to say, Derek, I'm a little disappointed that you're not decked out in the maize and blue of my beloved, albeit disappointing, Michigan Wolverines tonight. I can only assume that means you've been practicing the best fight song in all of college football, aka the Victors.
I need to hear a few verses. Maybe if you could start singing it, then maybe I can take it from there.
I don't want the ears of our viewers to bleed this evening, but no, it's I have to say it's been a little tempered. Michigan, after that first promising victory, things have fortunately gone downhill very quickly. You know, it looks like maybe PJ Fleck actually might be rowing that boat from Minnesota across Lake Michigan and back to Ann Arbor, because I wouldn't be surprised if perhaps Jim Harbaugh might be making a short trek east to take over my equally loved but even more disappointing Detroit Lions. So,
well, definitely don't want to see PJ Fleck make the trek to Ann Arbor. We're happy with him in Minnesota. He's rowing the boat for the Gophers, so we love it. A lot of enthusiasm in Minnesota for our team.
No, but as I say, Derek's been a good sport. I'm very passionate about my Michigan Wolverines, so he's been a good sport this last week. But I'm sure people don't want to hear of us bantering on about our favorite college football. So I'm going to turn things over to you, Derek, and looking very much forward to what you have to teach us this evening.
All right, thanks, Wayne. Just share my screen. All right. Okay, like Wayne said, I'm going to be talking about the secrets behind AAII's new dividend grader. And I just want to follow up with what Wayne was saying. Happy Veterans Day. And again, on behalf of everyone at AAII, thanks to those of you who have served or are currently serving. And a big shout out to my sister and father as well, both celebrating Veterans Day today. Just want to start off with going through the presentation overview tonight. I'm going to talk about, because I want to give some context behind the new dividend grader. So that means I am going to be talking about the AAII dividend investing strategy, again, to give some context. I'm going to talk about the 3 pillars of dividend investing. And I'm going to try to answer the question why using a dividend grader can help you build lasting income. And I'm just going to touch briefly on the process behind developing the AAII dividend grader. and going to talk about a few practical ideas for building a dividend portfolio. And then finally, I want to finish with a live demonstration, go through the new dividend grader, and that will be the evening. And again, if you have questions along the way, please feel free to send those in, and Wayne will address those throughout the presentation.
Okay, let's launch into our first poll, right, Derek?
Let's launch into our first poll. Absolutely. Let's get started with a poll before getting into the first slide.
Sure. So we did want to know if you're currently invested in dividend-paying stocks. Please vote now. We'll keep this up for about a minute or so. Wayne, I see some questions came in. Is there one that we can ask right now?
Yeah, actually, Alex from Gem Lake asked Derek, what's the stock universe for the stocks that are in the AAII Dividend Grader?
Yeah, so that's a great question, Alex. So we use our software program called SI Pro. There's over 6,000 stocks in that research database. Of those 6,000, there's over 2,000 that are dividend paying stocks. So the dividend grader, it focuses on US based, US dividend paying stocks. And to be able to get a dividend grade, a company has to currently pay a dividend.
All right, I'm going to go ahead and close the poll and share the results with everybody. So about 89% of our audience tonight is invested in dividend-paying stocks, with 11% saying no. Maybe you can convince us why you might be interested in investing in dividend-paying stocks.
No, that's great to see. I always like to know, who the audience is, who's participating tonight. Sounds like there's a lot of dividend investing fans out there, so hopefully this will be right up your alley. So thanks for answering that first poll question. We'll have a couple more as the presentation goes on. But I just wanted to start off with talking about what AAII Dividend Investing is. It's a strategy where we seek stocks that have the potential to rise in price and to make larger dividend payments in the future. And it's a total return strategy. So, and again, we seek to identify the best dividend opportunities by focusing on a select universe of well-financed companies that have a long history of sales, earnings, dividend growth, positive free cash flow, and attractive valuations. And so the strategy, it's based on some robust studies of market factors that have contributed to strong long-term market returns for dividend-paying stocks. And what is involved with AAII Dividend Investing? It is a model portfolio with 24 stocks in it. I'll get to that in a second. But what also is included in dividend investing, there's a weekly email commentary. There's also a monthly dividend investing newsletter where we profile different companies that are in the portfolio. There's always an educational element to everything we do at AAII. So the back page of that newsletter, it's always educational focused. And again, it provides the education and tools necessary to analyze, research, and manage a successful dividend portfolio. And so just wanted to look at the dividend investing model portfolio in a little more detail. It is a model portfolio. There's real capital invested. The model portfolio started in 2012. It is 24 hand-picked dividend-paying growth stocks. They are all US exchange traded. It's very diversified across sectors. We have consumer cyclicals, we have technology companies, we have healthcare companies, industrials, you name it. We definitely look at diversification. The two sectors we do not invest in are REITs and MLPs. It's not to say that those aren't great investments. There's a lot of successful REITs and MLP investors and companies out there. It's just due to some tax complications. We decided at the inception of the DI model portfolio that those would be sectors that we would not invest in. It does have a large cap value tilt. Looking at the current composition of the model portfolio, monthly, there are dividends that are paid monthly. So every month you can look forward to receiving dividend income. And if you look at the dividend yield of the model portfolio, it's right around 3% versus the market, which is about 1.7%. And our benchmark is compared to the Dow Jones US index, which is ticker IYY. It does follow a proprietary quantitative strategy. It's rules-based. And one other component, we alert members whenever there's a portfolio or addition or a deletion, and we give the rationale behind why a particular stock is being added to the portfolio, and at the same time why a stock would be deleted. And just I like to add a current sample of some of the companies in the portfolio. We are currently invested in Walgreens, PepsiCo, Medtronic, United Health Group, Home Depot. So a lot of names that are very familiar to people. And then there's some that definitely fly under the radar, and I would consider Hubble to be one of those stocks. So we definitely look at under the radar stocks as well. And you can look at some of our former holdings. We held Apple at one time, Microsoft, and we held the utility company WEC Energy. I wanted to touch on the three pillars of dividend investing, just because that's really what drives the dividend grader. So I just wanted to make sure everyone had an understanding of what's behind the grader. There are three pillars to dividend investing: valuation, growth trends, and financial strength. And I'm just going to go through each one of these. So just in terms of valuation, so as it says on the slide, stock prices tend to fluctuate between high and low extreme valuation levels. And these relationships, they can be used to determine a stock's value range. So we look at dividend yield, and we also look at price earnings ratio. And if we go to the second pillar, which is growth trends, really a company's success, it's driven by its ability to generate sales and convert those sales into earnings and cash flow. And you can see there some of the characteristics that we analyze. We look at margins, we look at earnings, we look at operating cash flow, return on assets, and of course, dividend growth. And we're really trying to answer the question, does and can the company grow its dividend? And third, we look at the financial strength pillar, and we want to understand a company's underlying financials and its ability to generate cash flow, pay its obligations, and return capital to shareholders. And again, you can see some of the characteristics that we look at. We look at payout ratio, we look at leverage ratio, interest coverage, we look at the dividend history. And again, we're trying to answer the question, you know, is the dividend sustainable? So we look at those three pillars. So I just wanted to give you a brief background on what's behind the dividend grader.
Okay, Derek, I believe you have another poll ready, so we're going to go ahead and launch that.
Okay.
We wanted to know from tonight's audience, have you ever used a dividend grader tool before? Yes or no? Obviously, this is the focus of tonight's presentation, and Derek just went over kind of the three pillars of DI. But yeah, just curious if anybody has used one before. Wayne, while we wait for the results to come in, any questions from the panel that we can answer right now while we wait?
Yes, actually, Jared from Brandon asks, do you have to be an A+ investor subscriber to access the dividend grader?
Jared, it's a very good question. Actually, the dividend grader, it is exclusive to DI subscribers. So unfortunately, at this time, it is not broader. It is not available to the broader group. It is a dividend focused tool especially for dividend subscribers, dividend investing subscribers.
But Derek, just to clarify, the subscription to AAII Platinum, which includes all of our newsletter products, of which DI is one of them, those folks do get access to the grader, correct?
Absolutely, yes. Thanks for the clarification. Yeah, absolutely. If you're a Platinum subscriber, you'll definitely have access to the dividend grader.
Okay, so we're going to share the results of the poll. And yeah, about 90% of our audience tonight has not used a dividend grader tool before, which is sure to be exciting news for Derek, while 10% has used a dividend grader. Yeah, Derek, any thoughts?
Well, I hope after this presentation that will those numbers will shift around. So there definitely are some good reasons to use a dividend grader, which I'm going to get into in a moment. So thanks for answering that question, folks.
All right, let's continue on.
Okay. All right. So that's a perfect segue. So right now I'm just going to talk about the rationale behind AAII's new dividend grader. We started with the belief that we just wanted to deliver more meaningful tools and resources to help dividend-focused investors to help identify and evaluate dividend-paying stocks that really meet your income investing needs. It is, like I just answered for Jared, it is an exclusive dividend grading tool designed to analyze any US traded dividend-paying stock. So again, yes, it is exclusive for dividend investing subscribers and Platinum subscribers. It is based on the 3 pillars of dividend investing, which I just covered, valuation, growth, and financial strength. And really, you can just think about it as just an easier way to start analyzing dividend paying stocks. Now, I'm not saying you just look at the grades and you buy just based off of the grades. It's a starting point in your due diligence process. And so the dividend grader, what it does, it generates an outcome that combines numeric scores with letter grades. And then the dividend grades, they are determined by their underlying scores. And for each of those underlying scores, which I'll get into in the live demo, we provide a level of detail and transparency.
All right, I believe it's time for our next poll, so I'm going to go ahead and launch that. If you have used a dividend grader before or plan on using one in the future, what is the main reason why you would use it? Please select one answer, of which you can choose from receiving objective feedback on a stock's underlying characteristics, whether you want to evaluate a buy or sell decision, perhaps you want to get a second opinion on a stock you own or are considering buying or selling. Perhaps you want to generate a list of dividend-paying stock ideas, or some other reason that's not among the reasons listed. We're going to give this one a little bit longer. Wayne, are there any questions from the questions panel that we can answer now while we wait for these results to come in?
Yes, actually, see if Derek has been keeping up on his definitions of financial multiples. Bert from Amboy asks, what's the difference between a trailing and a forward PE?
Trailing and a forward PE. So, excuse me. So, yeah, so the PE ratio is just the price over earnings. So what that looks, the only difference between the two, so the numerator is the stock price. So in this case, the denominator will change. So for trailing, you're looking at the last 12 months earnings. And then for the forward earnings, you're looking at earnings estimates. That's what I believe off the top of my head. So hopefully I got that one right, Wayne.
You did. You passed that test.
All right, so let's go ahead and share the results of this poll. Kind of some split responses. The leading response was to generate a list of dividend-paying stock ideas, followed by to evaluate a buy or sell decision. In third place, get a second opinion on a stock they already own or considering buying or selling. Derek, does this surprise you at all?
No, it's actually exactly what I wanted to see, because there are several reasons why someone could or would want to use a dividend grader. So I'm going to talk about that in a second. And I'm not surprised to see generating a list of dividend paying stock ideas. That's one thing as editor of AAII's Dividend Investing. I'm always getting questions. People are very excited about the portfolio, but you know, maybe there's stocks in there that they don't want to own, so they're always looking for ideas. So that is one reason you could use AAII's new dividend grader, is to generate some ideas. So let me get into that then. So yeah, why using a dividend grader can help you build lasting income. And it's exactly what the questions were in the last poll. It helps you receive objective feedback on a dividend-paying stock's underlying characteristics. Again, these dividend grades, they're rule-based, so it's looking at all the underlying characteristics. It can help someone evaluate a buy or sell decision. And it can provide people with a second opinion on a dividend paying stock that you maybe own or are consider buying or selling. And again, like number one in the poll, it's a great way to generate a list of dividend paying stocks. And for example, you could look for, let's say you're a deep value investor and you're looking for opportunities that you think are undervalued. So you could use the dividend paying or the dividend grader to look for companies that grade A on the valuation scale. And just this might be stating the obvious, but the grading system, it's just like you had in school. A's and B's are good, D's and F are not. And it just, grades make it easier to quickly identify what's attractive, what's kind of in that average range, and what's perhaps unattractive. Okay, I just wanted to touch briefly on how we developed the AAII Dividend Grader. It was definitely a collaborative effort among the Dividend Investing Investment Committee. Wayne is on the Dividend Investing Committee. Charles, who's the editor of the AAII Journal, and then John, our president, is on the committee. So a lot of back and forth, and a lot of help from our research team, technology team, editorial group. It was definitely a team effort. And we started just by considering several important characteristics of dividend paying stocks. If you were to look back at the three pillars of dividend investing, there were a bunch of characteristics listed there. We purposely sought out metrics that were shown to be predictive of strong dividend growth, safety, consistency, and attractive relative valuations. We also looked at the competitive landscape. There are other dividend grader tools out there. So we just looked at what other metrics folks were using, and a lot of the research that we have it's based on academic studies. And actually, Wayne, he identified a unique approach to assess dividend sustainability that we used in our dividend strength grade. So, and I'll touch on that during the live demonstration. And then, of course, we back tested the results of scoring systems across all the letter grades, and we went back to 1998, and we did back testing through 2019 to ensure the validity. And the AAII Dividend Grader, it will continue to evolve. We launched it. We were excited to launch it last week. We've already received some feedback from dividend investing subscribers. A couple of the things that some of the feedback we received, people would love the ability to filter dividend paying stocks using a slider, so you could identify, the A grades, the B grades. That is not part of the dividend grader yet, but again, this is going to continue to evolve. We also had a comment that people would love the ability to import a portfolio or portfolios maintained in A+ investors. So I am keeping a list of feedback, and again, it will be a process where we meet as a dividend investment committee. We look at our IT resources and we're absolutely happy to continue enhancing and make this tool more useful for folks. All right. I also wanted to just touch on briefly some practical ideas for building a dividend portfolio. Again, we can generate a list of dividend paying stocks. You could consider all the 3 dividend pillar grades together. You could look at them individually. If you're just looking for opportunities where there's an attractive valuation, maybe you would just look at the dividend valuation grade. Again, if you're looking for companies with a strong history of growth, you could focus on that particular grade. Or if you're looking for that consistency and that sustainability, you could look at that the strength grade. I of course think it's better to look at the grades together, but you really just have lots of different options using the dividend grader tool. And just below there is just a snapshot of what one of the tabs looks like with the grades, and that's something I'll get into in the live demo. The dividend valuation grade, just quickly, it looks at relative dividend yield and shareholder yield. So it has 2 components that make up the valuation grade. The score is not variable, meaning it must consider both the relative yield and shareholder yield to be valid. And unlike one of the things that might be confusing with the valuation grade is, unlike other valuation measures, both of these yields, the dividend yield and the shareholder yield, they're inversely related to value. So with higher yields, it implies lower valuations. So you can see on the example, the image there on the slide, actually a low score indicates that a company perhaps is undervalued, so it would receive an A grade. And I'll get into a few more details when we get into the live demo. Next.
Sorry, Derek. I think you believe it's time for another poll, so we're going to go ahead and launch that. Okay, so we wanted to know, you went over the 3 dividend pillars earlier. I wanted to know from the audience, which of the 3 dividend pillars is the most important to you when making decisions regarding?
Actually, Ryan, could we just hold off? I just want to get through 2 more slides, if you don't mind.
Oh,
sorry
absolutely.
if there's any confusion there.
No worries. Go for it.
I just wanted to, because I've only touched on the valuation grade, I just wanted to touch quickly on the growth grade. The growth grade actually has 4 components used to come up with the growth grade. Cash from operations growth, return on assets compared to its sector median, dividend growth rate for the last 12 months, and we also look at average annualized dividend growth rate over the last 5 years. And to be assigned a dividend growth score, stocks must have a valid percentage and corresponding ranking for at least 3 of those 4 growth components. And I'll just cover one more quickly. The dividend strength grade, again, that has 4 different subcomponents. One is the earnings payout ratio. We look at that compared to its sector median. We also look at the ratio of total liabilities to total assets. We look at times interest earned ratio compared to its sector median. And then we look at the dividend sustainability score, which again, I'll get into during the live demo. But to be assigned a dividend strength score, stocks must have a valid percentage and corresponding ranking, again, for at least 3 of the 4 strength components. So sorry about that, Ryan. We can definitely open the poll question now.
No, sorry, I didn't mean to rush you. But now that everybody knows what dividend valuation, growth, and strength are, which one is the most important to you when making decisions regarding buying, selling, or holding a dividend paying stock? Is it valuation? Is it dividend growth? Is it dividend strength? Maybe you think all 3 factors are equally important. Or maybe there's a hidden 4th pillar or 5th pillar even. If you think that, go ahead and select other. While we wait for these results to come in from our audience, Wayne, I see a very active questions panel tonight. Anything that we can ask here?
Actually, Derek, if you don't mind, a question came in that if I could probably take if you don't mind. We have Daniel from Randall asked, what's the difference between A+ investor and dividend investor? So if you want to, feel free, or I can take that one. I'll leave that to you.
Hey, feel free. I can have a drink in the meantime.
Okay.
Thank you.
Well, I mean, dividend investing, as the name denotes, is a portfolio of dividend-paying stocks. When we launched this, well over a decade ago, we were getting a lot of comments and questions and interest from our members who were looking for dividend income, and so we created this portfolio of dividend-paying stocks. So DI is at its heart a portfolio, a managed portfolio of dividend-paying stocks. A+ Investor, which is a new service that we launched in January, is actually an online investment discovery, analysis, research, and tracking service. It is not a portfolio service. It is more for the do-it-yourselfer looking for basically a one-stop shop to identify potential mutual fund, ETF, and stock investments. Pardon me, do analysis of them, as well as create and track your own investment portfolios and analyze those portfolios. So that's the difference, Daniel, between A+ and dividend investing.
Okay, now with the results came in, quite a large portion of our audience think all three factors are equally important, 62%, followed by 19% believing in just the strength pillar, followed by dividend growth, 13%, valuation ranked at just 5%. Derek, any thoughts about this? Interesting.
Yeah, no, I'm glad to see that the majority of folks, again, there's no right answer here. I'm glad to see that 62% thought that all three factors were equally important. I would agree with that, just again, based on the three pillars of dividend investing. You want to be conscious of where a stock's valuation is relative to its historical norm. Again, you want to look at different growth factors, and you want to know that the dividend is sustainable over time. So yeah, I think all three factors are equally important, but yeah, I'm not surprised to see that some people have maybe lean more towards dividend growth here or dividend strength. That makes sense as well.
Great. Well, let's. I believe you have a live demonstration up. I did get a note here from our colleague that the DI grader is up and running. So good news.
Yes, awesome. Yeah, like I said, we're very excited about it. It did go, kind of did a soft launch last Thursday, I believe. Dividend subscribers, if they were logged into the website, they discovered the grader was available. So yeah, it's live, it's up. So I'm going to walk through it now. So here, just starting off, this is what the dividend investing website looks like. So this is the home page. You can see all the different categories at top. So there is one. It is indicated with an orange ball, just to highlight that it's new, it's fresh. We want people to use it. We want to get feedback. So basically, you would just click on the dividend grader. And I'm not going to click on it live just because you never know what's going to happen. I do have screens already here on my system. But if you were to click that, it would take you to this screen, which again, it reminds folks of AAII's dividend investing philosophy. It talks about the three pillars briefly. And then there's a section that says, hey, getting started with the dividend grader. And what you can do there, you can enter in, again, any US dividend paying stock. You can enter the company name or ticker and hit evaluate. And once you do that, it would take you to a screen that looks like this. And I will get into this in a second, but first I just wanted to show one other screen. If you were to enter in a company that doesn't currently pay a dividend, so I just use Amazon as an example. If you typed in Amazon, you'll get a note here that says, hey, the dividend grader, it's a dividend grading tool exclusive for evaluating US listed dividend paying stocks. Such and such a company doesn't currently pay a dividend, so we can't provide a grade. So, all right, so just going back to the actual dividend grader. So there are two tabs. And I'm gonna scroll down. So I just used Tyson Foods as an example. That is a holding in the dividend investing portfolio. At the top, it just shows some basics of what's happening, the stock price, percentage up, down. And then at the top here, we have the 3 grades. They're right there, front and center. You can see dividend valuation, dividend growth, dividend strength. You can see its current grade. You can see there that there are some shaded boxes to the right. That is one of those enhancements that I'm hoping to have up and running in the next week, 2 weeks at the latest. And I'm going to go back in time and add those grades. So just a little more work to do there, but that rest assured that will be up. We have a stock chart, and then we get into some important dividend metrics. We show the dividend yield, payout ratio, five-year growth rate. So right away, you can just see what some of the key characteristics are. Some of the most recent dividend announcements. You can see when a company has declared a dividend, when its next payment date is, the ex-dividend date, which of course is very important for dividend investors, and then the amount of the most recent dividend. Next, if we just keep scrolling down, you get a company description, and then we really get into some of the fundamental information behind the stock. It's all in one convenient place. So price strength looks at the relative strength over the last 4 weeks, 13 weeks, 26 weeks, and 52 weeks. So you can see how the stock price is done against the greater universe of stocks. This next section I really like. It's a bunch of valuation measures. Again, you shouldn't just rely on one valuation measure. At dividend investing, we do focus mostly on the dividend yield and price to earnings, but we'll take a look at price to sales, price to book value. We'll also look at price to free cash flow. But I think this is one thing that is unique about the dividend grader at AAII is to show the history of the dividend yield, and you can just see where the current yield, how it relates to its historical norm. So I think that's a helpful measure. Again, we have a bunch of ratios here. We have profitability. So we look at a bunch of like the operating margin versus the industry, and we have return on assets, return on equity, tons of great information here. We also look at liquidity ratios because we want to make sure that a dividend paying company has the capacity to continue paying its dividend. And then we also have a summary here on earnings surprises. So we go back a couple quarters. We show what the estimate was, what the actual, show the surprise, if there was a surprise, etc. And then we also have the consensus earnings estimates for the most recent quarter. And then we also show what the annual estimate is for the current fiscal year and next year as well. And then down below, we just show a bunch of growth rates. Of course, we show the dividend growth rate over a couple different time periods. We have the 1 year, the 3 year, the 5 year, 7 year. You can really get a good understanding of how a particular company has grown its dividend. And again, the other metrics like sales, net income, and of course, earnings per share. And I really like this bottom feature. There's an annual financial statements. So again, looking at the key headings in the financial statements, we look at some of the income statement, we look at some cash flow numbers, and then we have a snapshot of the balance sheet as well. And we have this on an annual and quarterly basis. So you just click on one of those 2 tabs. So a lot of financial data there. I think that's just a great snapshot to look at a dividend paying stock in important metrics. So, if that were all we had, you might actually be like, okay, that's almost information overload. I'm not sure. It's great. It's helpful information. So that's why we have this second tab, which is called the DI scorecard. This really looks at a lot of that underlying information and it translates it into a dividend grade. And that's what I'm going to talk about next. So let's just talk about the layout. It's called the DI scorecard. At the top, we will have the dividend pillars all filled out for current and going back over different periods over the last year. Here we have a summary of the dividend valuation score, and the score relates ultimately to a grade. So you can see here the three different pillars: dividend valuation, dividend growth, and dividend strength. And really, because at AAII, our mission is all about education. It's about transparency. It's about explaining and just really talking about the underlying components that go into these different grades. So if you keep scrolling down, we have a summary here of how a particular company, how it grades and scores on those different metrics. And if you want more detail, we have that below. So we have this AAII dividend grader analysis. And so for example, for the dividend valuation grade, like I mentioned earlier, there's two components that make up this grade. It's the relative dividend yield and it's the shareholder yield. And if you want to know what those are, all you have to do is scroll down, and we have this section here just dedicated to the relative dividend yield. It gives a definition. It shows what the dividend yield is, how it ranks among other US listed dividend paying stocks. Again, it shows the calculation, and it reminds people that it is an inverse multiple. And so a lot of great information here. It then talks about the score, and the score then translates into a grade. So we have that for the relative dividend yield. We also have that for the shareholder yield. And one thing I just want to touch on, I'm just going to go into a little more detail because I think it's important on the relative dividend yield and how we think about valuation. So again, unlike other valuation measures, the relative dividend yield, it's inversely related with value. So with higher relative dividend yields, it implies lower valuations. So the dividend yield, it can be used to calculate a valuation estimate, indicating if a stock may be expensive relative to its historical norm. So if a current dividend yield is greater than its 5-year average yield, then it is a signal that a stock may be undervalued relative to its historical average. So that's really what we're doing with the relative dividend yield. We're looking at the current yield. We're looking at it compared to its 5-year average. We're trying to determine if it's above that, below that, and then that translates into a signal whether that particular stock is under or overvalued compared to that historical norm. So, and just to give you an example, for example, if a company is paying a 3% dividend yield and it has an average dividend yield over the last 5 years of 2.6%, its relative dividend yield is 15.4%. So what you're doing is you're taking the current dividend yield and you're dividing it by the 5-year average. That gives you the relative dividend yield, in this case, 15.4%. And don't get nervous. All this is actually listed here under the relative yield. It's here in this section, and it explains how we calculate it. So let me just move on to the dividend growth grade. The dividend growth grade, it looks at 4 different components, It looks at the growth in cash flow from operations over the most recent 12 months. It looks at return on assets relative to the sector median. It also looks at dividend growth over the most recent 12-month period, and it looks at average annualized dividend growth rate over the last 5 years. And again, to get a dividend growth grade, a dividend paying stock has to have a score and at least 3 of those 4 different components. So I just wanted to touch on a couple of those. Let's talk about the return on assets. So just give me 1 second here. So return on assets for the latest 12 months, that's a measure that it measures management's ability and efficiency in using the firm's assets to generate operating profits. And the return on assets ratio, it also reports the total return accruing to all providers of capital, so debt and equity. And a high return on assets, it implies that assets are productive and well managed. So it's definitely an important component to look at when you're looking at dividend growth. So a company's return on assets ratio, we compare it to its sector median, because some sectors, we didn't think it was fair to compare it to the entire universe of dividend paying stocks, because some sectors, they're more capital intensive, and they tend to have higher levels of fixed assets, and therefore they would have lower asset turnover ratios. So we wanted to make sure we're comparing it to its sector. So return on assets, just a reminder, and so Wayne doesn't quiz me on another financial ratio. Return on assets, it's calculated as net income divided by average total assets. And I just have any questions come in, Wayne, that we could address now before continuing with the demo?
Sure. Actually, we're getting a lot of questions are coming in. Actually, I will quiz you on another a couple more definitions here.
Okay.
Actually, Mike from Greenbush was hoping that you could re-explain the term times interest earned.
Okay, sure. And I'm actually gonna, let me just scroll down to times interest earned. It is one of the dividend strength score components. So let's just go down to times interest earned. And so just to give the definition, it's most commonly calculated by dividing a company's earnings before interest and taxes, also known as EBIT, and dividing that by its interest expense for the same period. So it's really what the interest coverage ratio tells us. It's trying to determine how easily a company can pay its interest expenses on outstanding debt and operating earnings. So a high interest earn ratio, that's what we're looking for. We're looking for anything over 1 or 2 times. That means that their EBIT can cover their interest expense. And if you can cover your interest expense, that's a good sign that there will be money left over to pay dividends. So hopefully that answers the question.
Great. Do you have time for some more? Or do you want to keep going?
Yeah, no, let's take another question.
Okay. This is a little bit broader stroke, but Daniel from Landfall actually is interested in knowing the difference between the A+ stock grades and the dividend grader.
Okay. Do you want to take first crack at that, Wayne, and then I can
sure.
add on, if you don't mind?
No,
you are the product manager of A+ Investor.
Actually, let me show myself to the world if I scare people with that. But the A+ Investor, for those of you that aren't aware, with A+ Investor, we actually have 5 factor grades that give A, B, C, D, and F grades for companies looking at valuation, momentum, quality, growth, and estimate revisions. So we have these grades with numerous underlying fundamental criteria that are used to evaluate stocks based on these 5 different investment factors that research and real-world experience has shown can oftentimes identify stocks that over the long term outperform the broader market. The dividend grader, though, is exclusive to where it evaluates key components that will impact a company's ability to pay a dividend, as well as looking at the valuation of a stock based on its dividend yield, as well as the strength and stability of its overall dividend payments. So the dividend grader focuses on components that are very useful in evaluating dividend-paying stocks, whereas the A+ stock grades look at a variety of factors, again, value, momentum, quality, growth, and earnings estimates. So they are very unique and different from each other. So that hopefully provides a good explanation of the difference between the two.
I couldn't have said it better myself. So thanks, Wayne, for addressing the difference between those two. That's right on. So I mean, one additional thing to think about. Yeah, the dividend grader, it's just focused on dividend paying stocks. So you'll get grades just related to the dividend valuation, dividend growth, and dividend strength. So
time for one more? Do you want to keep going?
Yeah, no, let's take one more and then I'll finish the live demo.
Okay, actually we've gotten numerous questions. This is looking more at the dividend investing portfolio, but how often do you evaluate the holdings in the DI portfolio to decide whether or not you want to make changes?
No, great question. Here's how the process works. So every month, the dividend investing committee gets together. We all review the holdings together. We talk about what companies are performing well, which ones are underperforming, why not. We also look at if companies are meeting some of our sell criteria. Like I mentioned earlier, we definitely are rules based. So we do have specific rules. If a company meets a certain criteria or doesn't meet, then it would be looked at as a potential sell candidate. So we do that on a monthly basis. We go through the portfolio, and it's at that time where we're looking at these 3 pillars and seeing how a particular company stacks up. Is it perhaps overvalued compared to its historical norm? That's one of our sell triggers. It's not the only sell trigger, but typically we're looking at these different metrics, and then if there is a change to be made, I come with. So I've done my homework before getting together with the investment committee. I have a short list of stocks that I would recommend to the group, and I would make the argument, and I'd go through the strategic rationale of why a particular company meets the different characteristics of a dividend investing stock. I go through some of the, we like to call it the bull bear case. So give reasons why, what are some good reasons to buy the stock, and what are some of the risks. So, you know, we look at a bunch of different elements. We go to that meeting, and then based on that, we make a decision if we're going to add a company to the portfolio, if we're going to delete a company from the portfolio. One thing, we always have 24 stocks in the portfolio. So if a company meets a sell criteria, we always replace it with a new candidate. And just another interesting note is, where do we get some of our ideas for potential replacement candidates? We actually, and let me just, for still sharing my screen, we have this tab here called DI Ideas. And what DI Ideas is, it's a list of potential, it's exactly what it says it is. It's dividend investing ideas. It's companies that currently meet our screening criteria, our screening filter. And it's just a list of ideas that could be potential candidates. They may or may not be added to the portfolio. And that list of ideas, at any given time, it ranges from, I've seen it as low as 20 companies just depending on what's going on in the market, up to 60 different companies. So we look at that list as well when we're evaluating additions and deletions to the portfolio. So we definitely have a rules-based process that we follow for the dividend investing portfolio. All right, so I just want to finish out the live demonstration, and then we can take some more questions. I wanted to go through the dividend strength grade. Again, the dividend strength grade, it looks at the earnings payout ratio relative to its sector median. It looks at the ratio of total liabilities to total assets. It looks at the one that we just talked about, the times interest earned ratio compared to its sector median. And we look at the dividend sustainability score, which I think is one of the unique features of the dividend grader. I mentioned earlier that this was, Wayne is always doing research. He's extremely helpful. He's always sending me articles if it relates to dividend paying stocks, what's happening in the greater dividend paying universe. He's always on the lookout for dividend, just dividend information, dividend education. So I get a lot of articles sent to me from Wayne. And so he found this one, and it is one that I wanted to touch on again, because as I've looked at other dividend graders from our competitors, I have not seen this in any of in their dividend grading tools. So I think it makes our tool unique. And let me just get to, I want to pull up my notes so I make sure not to forget anything important here. And again, all these notes are listed here. If we were to scroll down below, we have this dividend sustainability ratio score. So what it is it's helpful, and why we look at it, it's helpful to understand a company's dividend payment history and growth trajectory. Okay, so nothing shocking there. What the dividend sustainability, the concept, it looks back over a 7-year history, and sometimes I've seen it looked at over 10 years. We look at it over a 7-year history, and we're really trying to see how many times a company has cut its dividend and by how much. And so it's a way to quantify that score, because otherwise sustainability, it's kind of nebulous. But this is one way we found to quantify it. We can look at numbers, we can look at historical performance, and we can come out with a score. So there's a number that's derived from multiplying the two figures involved in the dividend sustainability score, which again is looking at the number of years, the history, and then to see if a company has cut its dividend. So I'll go through an example here in a second, but a score of 100, that indicates that a dividend has never been cut. So to calculate the dividend sustainability score, a company must currently pay a dividend and have paid a dividend 7 years ago. If it doesn't meet those two criteria, we can't calculate a score. If it does meet those two criteria, then two questions need to be answered. One, how many times has the company cut its dividend? And two, by what percentage has the dividend been cut each time? So again, the dividend sustainability score, it has a maximum value of 100, and there also it can result in negative values. So it can result in negative values if a company has ever cut its dividend. But the higher the score, the better. So for example, and unfortunately I can see this is one thing we're gonna fix, but I do have an example here for a company called ABC that shows the calculation. And what it shows is that ABC, it currently pays a dividend, so check, it meets that criteria, and it has paid a dividend for 7 consecutive years. And if you were to see the example, you would see that the dividend sustainability is a score since it has not cut its dividend over the last 7 years. I think the more interesting example is, again, if we could see it here, So I apologize for that, but we'll make sure to get that fixed. If we were to look at XYZ company, and in this example, XYZ, it was a 2-time annual dividend cut offender over the last 7 years. In the example, we said in 2008, XYZ slashed its annual dividend by 50% from 96 cents per share to 48 cents per share. And then in 2019, XYZ cut its annual dividend once again, and this time it cut it by 91.7% from 48 cents per share to 4 cents per share. And it came out to an annual dividend sustainability score of negative 183.34, which obviously is not the direction, and that is not a strong score and does not show a strong dividend sustainability. And for those astute participants out there, if they recognize some of those numbers, they will recognize that example as GE, so General Electric. That's exactly what happened. And so they would rank very low on the dividend sustainability score. So I just wanted to cover that because I think it's a unique feature, and hopefully you can check back into the dividend grader when we get these examples fixed so you can see the actual calculation. But with that, that really is what I want to show people in the live demo. I think there's a lot of great information here in a summary format. So hopefully that will help people that are looking to help in their decision process if they're looking to buy or sell a dividend paying stock, if they're looking for a second opinion. And again, if they're looking for different ideas, you can enter in a specific company, see what its grades are, and start there for your due diligence. So with that, Wayne, I'm happy to, I'm going to stop sharing my screen, and I'm happy to take some more questions.
Okay, so might throw a bit of a curveball at you, but actually it was an interesting question. Melinda from Sunfish Lake is wondering why you call dividends a return of capital. That's not a term that she's ever used in reference to dividends.
A return of capital. So we think about return of capital is anytime a company returns capital to its shareholders. So companies can return capital to shareholders in a couple different ways. One way is through a dividend. Of course, that's the metric we're most interested in. But another return of capital is if a company buys back its stock. And actually, those are the two components, the buyback yield and the dividend yield, which makes up one of our two valuation criteria. And so we look at how a company is returning capital to shareholders. And then a third way is you could look at if there's been a reduction in debt. That's another way that a value is being added to a company. So hopefully that helps explain return of capital.
Yes, that's a very good answer. Bruce from Little Fork is wondering if buyback yield is part of the dividend grader.
So it is. It absolutely is. It is included in, just like I said, in the shareholder yield. So if you were to go to the shareholder yield component, again, the formula for calculating shareholder yield, it's dividend yield plus buyback yield. And that is one of the components we use in our valuation grade. So absolutely, it's an important feature. We like to look at both because they are both two forms of returning capital to shareholders.
And so does a segue to that, John from Hilltop, hopefully that answers your question then, the difference between dividend yield and shareholder yield, and shareholder yield is dividend yield plus the buyback yield. Right, Derek?
Absolutely, you got it.
Excellent. So let's see, we have Norbert from Green City. He is a new DI subscriber, and he's wondering if there's any resources or guidance that you could give him on how to go about creating his initial DI portfolio.
It's a great question, Norbert. Appreciate it. Thanks for being a new subscriber to DI. And yeah, and this is the great thing about the dividend investing service. We have an archive of articles. We have a user guide, and it covers a lot of these questions that new subscribers have. So we have articles that talk about how to go about building your portfolio. And there's a couple things that when we've addressed this in articles in the past, there's the number one thing we look at, and we would suggest people starting out their portfolio, is to look at companies that are still currently passing the DI ideas screen. And so if you were to go on the DI ideas tab, it has a list of all the current companies, DI companies and non-DI portfolio companies that pass the criteria. And on that tab, it will show you which current DI holdings are passing the screen. So I would start there. I would also the number two, and I'll give you three. The second is I would look at the companies that were most recently added to the portfolio. And then third, because valuation is an important component, I would look at companies that are undervalued, relative to their 5-year dividend yield. And those are things we talk about in some of these articles. I'll mention which companies currently meet those criteria. And yeah, those would be the three places I would start to build your DI portfolio.
Excellent. Ron from Westbrook would like to know how often the underlying data points used for the dividend grader, how often are those updated?
Yeah, no, great question. Thanks, Ron. They are updated daily. So it's as current as information can be. It's constantly being updated.
Let's see here. Phil from Verndale would like to know whether or not credit rating is a consideration for either the dividend grader or the selection criteria for the DI portfolio.
It is not an explicit characteristic that we look at. We do look at credit, in other different ways, like total liabilities to total assets. We'll look at the times interest earn ratio, but we don't look specifically at a company's credit rating. Well, actually, let me just step back. So we're definitely rules based. We use quantitative screening criteria, but so once a company has met those criteria, we obviously do have some qualitative things that we'll look at. So we will, I don't always look at their credit rating, but sometimes I have, just out of curiosity. I'll also, refer to different analyst reports. As much information as I can gather on a particular company, that's what I'm doing. So, sometimes I'll look at the credit ratings.
So we got a couple more questions. If you have a few more minutes to stick around, Derek.
Yeah, let's take a couple more.
We're getting numerous questions from people just for clarification. Is the dividend grader, can people use that to analyze ETFs or mutual funds?
No, they cannot. It is not, it's really individual US exchange traded individual stocks. So no, it is not set up to look at ETFs, mutual funds. It wasn't designed with that in mind, but who knows? We're always looking for people's feedback, so maybe that's something that gets added in the future. But at the current state, it's not available.
And lastly, Soon Lee from Excelsior would like to know, are the 3 pillars within the dividend grader are they considered equally weighted, or do you give any preference amongst any of the three, added weighting amongst any of the three?
No, it's a great question, and I think I detected that might be someone from my home state of Minnesota. So shout out to Minnesota. So they're all equally weighted. So their individual scores, they're based on their subcomponents. We don't have an overall score, and maybe that's something, again, looking at future enhancements, maybe that is something we'll consider, and we would at that time give weightings based on if we thought one metric was more indicative of better performance than the other two. But at this time, they're definitely compartmentalized and based on their individual subcomponents.
Well, thank you very much for that explanation of that data. And that actually concludes the Q&A section. So Derek, wonderful job this evening. I'm very informative. Yes, so thank you very much.
Well, thank you. Thanks for moderating, Wayne. I appreciate it, and thanks to everyone for participating. Again, I'm very excited about this dividend grading tool, and hopefully people use it. So thanks.
Derek, if you wouldn't mind sharing your screen, I did want to tell folks who are viewing, we do have a special offer for DI. If you could bring up your slides, that would be...
Sure. Yep. There we go.
Sorry, I'm not seeing it yet. There we go. It's catching up. All right, so we do have a special dollar trial for those of you who are watching in the audience. You can see it at that URL, special dollar trial. You get access for about a month for DI, just $1. Click on that link there. We'll also have this link in the show notes if you don't catch it. It's also available in the handout. And I'm going to go ahead and ask Derek to move to the next slide to talk about our upcoming webinars. So we do have some excellent webinars coming up. Of course, you can register for all of these at www.aaii.com/webinars. Next week, we'll be rebroadcasting Wayne's webinar of A+ Investor Idea Discovery Made Simple. That's next week at 7:30 Central. Then we'll be taking a little bit of a reprieve from webinars for Thanksgiving, and we'll be back December 2nd for another rebroadcast of Wayne talking about the SSR portfolio and how to invest like a stock superstar. That's December 2nd at 7:30. The following week, we'll have a new webinar from Charles Rotblut on taxing issues for investors, a preview of AAII's 2020 tax guide. He'll invite a tax expert as well as kind of previewing upcoming coverage in the journal about new tax issues. That's December 9th at 7:30 Central. And then the following week, we will have Charles again on key year-end financial planning steps. I've been following along with the individual investor wealth building process, codenamed AAII Way Project. That is the next in that series. That's December 16th, 7:30 Central. And with that, I wanted to thank everybody for watching. I want to thank Wayne and Derek for participating. A replay of the presentation tonight is going to be available tomorrow on our YouTube channel, along with the handout and to the rest of the resources discussed. And with that, we wanted to wish everybody good health and good wealth. Good night, folks.